It's incredible that the mutual fund platform was chosen by the regulator to be this brilliant conduit between mutual funds and PMS AIF. The SIF sits in the middle. It brings to the investor ease of mutual funds and transparency, along with a slightly upgraded risk profile.
Riskiness of the product only is because it allows you to do not only long positions, but also allows you to take short positions.
People who will look essentially to invest in this product should be people who have seen the vagaries of the market, have now understood the nuances of the market, hence the minimum threshold of 10 lakh. It is the evolving, the beginning of style-based investing, and every fund house will display the same product. And that is the excitement of SIF that is adding to our fund management backend as we progress as an asset manager.
Hello everyone. There is a lot of buzz and excitement around specialized investment funds, which is commonly known as SIFs, recently introduced by our market regulator SEBI. We are here to discuss what is it, how does it matter to investors, and what it means for evolving investors. I am Dharmendra Jain, co-founder at Ionic Wealth, a wealth tech firm which is at the intersection of domain and tech. Here with me is two stalwarts from the mutual fund industry. We have with us Mr. Swarup Mohanty, the Vice Chairman and CEO at Mirae Asset India, and Mr. Vaibhav Shah, the Head of Product Development at Mirae Asset India. Over to you, Swarup. The new SIF category, which is recently being talked about, how are you seeing this space getting evolved? You as an asset management firm, are you really excited about this new category of funds?
I think at the outset, would like to congratulate Ionic for starting such an incredible effort and wish all of you all the very best as you build this journey of wealth creation in the country. It's a progression of wealth creation. I mean, when you look at the entire space, I think it's incredible that the mutual fund platform was chosen by the regulator to be this brilliant conduit between mutual funds and PMS AIF. I mean, when you look at it on hindsight, mutual fund investors are used to the transparency and the ease of transaction along with professional fund management, while PMS AIFs are evolved investment vehicles catering to a slightly higher risk profile of investors. Now, the SIF sits in the middle. It brings to the investor that same professional management, ease of mutual funds and transparency, along with a slightly upgraded risk profile, because the liberation of certain regulations have been liberated to an extent that we can blend the two. It's a great thing for investors. They look at it from a new angle perspective, especially for us as asset managers. We get to express ourselves in a far higher risk profile. And it'll be interesting to see how the industry evolves on this from our side. I think we've been waiting to unfold this journey. You've tracked us for a long time. We don't have an active PMS background, but this will be the beginning of showcasing our fund management backend and our ability to express ourselves in those risk profile products.
What would have been the thought behind launching an SIF? And also, what are the basic features of SIF? Can you just touch upon that?
I think it is the progression of an asset manager. When we came to India in 2006, 2007, we started as a mutual fund, as it's called globally. Then slowly we progressed to starting the passive side of the business and the ETF side. Subsequently, we launched our venture capital business, which is now established well. I mean, we've had a track record there. It was natural that we then obtain a PMS license, but our PMS license is a little differentiated from the market. We want to give low-cost bundle ETF products from there. And then the final icing on the cake was taking the SIF license and cater to the riskier profile of investors. So it is just the journey of us progressing from being a mutual fund house to a full-fledged asset manager. We also acquired a gift license and probably in the process of progressing further on that. So when you look at our journey from 2006 to 2024-25, we just evolved an asset manager, and this is just how we want to progress and establish ourselves in front of people like you as a pedigreed asset manager with presence across asset classes.
You referred to it as a riskier product. Why are you referring to that, and why SEBI would have chosen a threshold of 10 lakh rupees for a product like this? Is it more riskier than the perceived mutual funds? lesser, and how does it complement also when compared to a PMS and an AIF or a combination of a PMS and an AIF?
Yeah, so just to add to what Swarup has been saying, the riskiness of the product only is because it allows you to do not only long positions but also allows you to take short positions. Now, essentially in India, all of us have been very bullish on markets, but markets will tell you markets don't go one way, right? They have the ability to go both sides, up, down, as well as sideways. You want a product which can give you flexibility of making money not only when it goes up, but the ability to generate return not when it goes down or also remains in a sideways manner. Now, the ability to make returns when markets go down, which means you are taking a contrarian view, will involve a certain higher risk, and that if that risk pays off, if your trade pays off, then you are able to generate that return. So I would say the reason of saying it's more risky is because we are taking a slightly different view on markets than the consensus and not mirroring how the market is behaving, and hence slightly more risky. But I would say not necessarily all SIFs can be risky, because they have the flexibility that your net equity position can be not as high as 100. You can run a portfolio with even 50 long position, which means you're not as risky as a pure long equity fund. So SIF gives you flexibility of doing short positions, hedge positions. So it can be risky at some times. It can be less risky at certain times as well. So the flexibility, like Swarup said, is immense.
I think compared to a mutual fund, we were not allowed to take short naked positions, right? Though we did take derivatives in the form of arbitrage, but that completely differentiated from a normal mutual fund positions. Apart from just derivatives or short positions on the equity side, you have more enhanced limits for single credit issuers on the debt side. And of course, the enhancement of limits for REITs up to 20% of the portfolio is also complementing this journey as an asset manager. So people who will look essentially to invest in this product should be people who have seen the vagaries of the market, have now understood the nuances of the market, and would take one step forward. Hence the minimum threshold of 10 lakhs. It is not exactly perceived to be a retail product. Though 10 lakhs, I would say, is not exactly non-retail anymore, but catering more to people who have understood the nuances of both equity and debt markets and are willing to take a step forward in complementing this as a part of their portfolio.
I think it's a welcome step towards making some of these sophisticated investors realize through a platform which has got flexibility and ease of execution. Second, the professional guidance of fund managers, and the fund manager's ability to also to navigate the market through the ups and downs. The flexibility in mutual funds never used to exist. If a fund manager has a view that markets may remain volatile with a negative bias, he might have in his earlier situations would have created it by adding more cash in the portfolio. But now you have got a tool where you can also go, or the fund managers can also go and create shorts, try to reduce the volatility of the portfolio, reduce the drawdowns in the portfolio, and give a much superior outlook to the or probably a response to the investors.
Sure.
Also, the tax advantages. How do you see the tax advantages of mutual funds? Will it continue to prevail in SIFs, or there is any difference?
As it stands as a mutual fund portfolio, so the taxation of mutual funds is extended. So and when you look at it, it's that way far convenient for the investor, because just extension of the mutual fund taxation into these products also.
So the entire derivatives, it gets taxed at an individual level at the highest tax slab, can get like a short-term or a long-term capital gain in mutual fund.
Exactly.
Which is depending on the asset class, equity, debt, or hybrid, the tax rates will be much lower.
True.
So actually, just to add to Swarup, see, the advantage SIF gets is it's an extension of mutual funds. So whatever is a mutual fund taxation sort of becomes applicable here. Now when you look at PMS or AIF, most of them get taxed at the investor slab rates. And derivative taxation is significantly high at slab rates. Now here you are getting a superior product, well managed, with a much larger tax efficiency. I think that will make it very attractive for a lot of HNI investors to look at this category and start deploying their investments.
I think there's a conscious effort to keep it different to the existing mutual fund schemes, and hence there's a requirement of a different branding also. Your take on that?
I think it's a welcome change, and I think it just speaks of the wanting the need for a segregation of risk profile of investors, and hence when you look at the mutual fund side, and rightfully so, the categorization of funds has kind of, I won't say exactly commoditized the product, but simplified the product to an extent that it is available for everybody. But as one starts an investment journey, you might start as you might perceive it to be a return generating process, but as you mature as an investor, you realize it's a risk mitigating process, and everybody's risk profiles are different, and as risk profiles evolve, the need for such products to complement and enhance the product portfolio quality is there, and hence this need to segregate both and then keep both sides different. See, the investor base will fall into a pyramid. At the bottom, for people who have just entered the market, will participate in the market. You go a little one step above and you want some professional management, that's when mutual funds come in. And then as you evolve to the top end of the pyramid, where you've understood the risk profile of yourself as well as the product, you go into these nuanced products, and then SIF sits up there.
Mutual funds, many times we often see that they are looked at more like a benchmark products. Do you see SIFs not like a benchmark products, and because of the concentration, they may take much higher active risks?
In this, I think Vaibhav and I will share our own views, because we might actually differ, and that's the beauty of SIF. Because see, you've given limits. There is 25% limit to short. There is 20% to go to say REITs. These are limits. Fund houses will display their own style through this limit.
The high conviction bets also.
Yeah, it's up to the fund manager, right? So it is not like painting the brush with painting the entire canvas with one brush. Every fund house will display their own style in this entire product. That is what makes it so exciting. For all you know, there could be a fund which will be only long only, might not exercise this at all, and hence the need for reading these products better, or going a little deeper than just a mutual fund, say large cap portfolio which says 85% large cap. It is not one solution fits everything. Every fund house will dig deep on their own back-end strength and come out and display that in the market. It is the evolving or the beginning of style-based investing, according to me, and every fund house will display the same product in a very differentiated manner. And that is the excitement of SIF that is adding to our fund management backend as we progress as an asset manager.
Maybe just to add to Swarup, see, essentially we look at mutual fund as market cap or some sector sort of style. Here you are free to express yourself. You don't have limitations on which market cap to invest, or which segment to go long, or which segment to go short. So you have the entire canvas of stocks to play with. You can go long on few, you can go short on few. There are various strategies. So within equity you have 3, and on the fixed income side you have 2, and on hybrid you have 2. So you have the guardrails in place, but you have flexibility much higher to express on how you would want to create a portfolio. And I believe that's a beautiful advantage that this category gives. Sometimes we get confused that if there is flexibility, do we need to use that? Maybe you don't need to use it, but it is always good to have that flexibility, so that in case the market scenario were to be adverse, you should have the weapons in place to be able to defend yourself. So that's, I think, the advantages this category can give to investors, which will make it very exciting.
The credit space can take a rebirth through the SIF now.
Yes.
With the enhanced limits of single issuer credit limits going far broader than what it was. The way we expressed our credit portfolios on the mutual fund side will be very different from the way we express it on the SIF side. Please understand, we have the flexibility of redemptions also. And see, in any fund, whether it's mutual fund, PMS, AIF or SIF now, there are three investors who come to a fund on a single day. The investor who is there, the investor who comes in, and the investor who goes out. As an asset manager, we have to be fair to all of them on that particular day. Now, if you are stuck in a slightly illiquid asset, then the structure of the fund should be such that we are able to sell it, realize the money, so that on that day, the NAV should be fair to all the three. And that is why the flexibility of redemption is left to the asset manager. It's a slightly more evolved product than what mutual fund was.
Just as a devil's advocate, because the advantages of SIFs is many, but the talent, for example, mutual funds had a certain way of managing money so far. Suddenly, there is a new way of managing money. How are you going to attract talent? How are you placing yourself that and do you think that couple of years it will take time to get stabilized also on how this SIF is going to be? So what's your thought as looking to this mutual fund so closely? What are your thoughts on that?
I think, DJ, this is the question. There is no question before this or after this, because mutual funds have put up a certain track record in a certain style of fund management. This is very different from what we do. So it's up to us to now approach this business in a very differentiated manner. And that's where I think the discussion on risks have to be more clear, have to be more transparent, and have to be absolutely 100% on the table. Everybody's demonstration or expression of that risk of the profile will be very different. And I second your thought that maybe for a fund like us, we will probably graduate into it over a period of 2-3 years before realizing our own strengths and then probably expressing it. We are not looking at it to jump into it in a certain manner, because the market will also evolve, other players will also come in, and then it's a very exciting time. But what you said is absolutely correct and spot on. I think that is the only thought that is there at our back end. How do we approach it, and how do we mitigate the risk of these products in a manner that is absolutely transparent to you as people who recommend products, and also to investors who will come and invest. If this discussion at this moment and the beginning can be based on more on risk than on return, no, return is always an outcome, then lot can be done in this space is a submission.
Maybe just to add to Swarup, let's take example of cricket, because all of us understand cricket. Right, we have got 2020, we've got T50, and now you've got Test. You need a person to be able to adapt to all three different modes of film. We had good managers who were great PMS managers. They came on our side and they became great MF managers. Can they become great SIF managers? Time will tell. But if you have the talent and the ability to understand markets, ability to understand stocks, I think so it's not a very different animal that we need to be so worried about. It's just that you have to make some tweaks in your technique to make and sharpen yourself. So there will be managers who will be able to adapt only to T20 or one style of sort of managing, and there will be someone who will be able to manage all three styles. So I think so the industry will sort of evolve to managers who will be specialist and someone who can manage all sort of asset classes across PMS, AIF, sort of MF as well as SIF. But there will be good talent. India has already showcased good talent and MF managers. I think that this is just an extension where you will see some of those MF managers come out quite well.
But say, unlike mutual funds where, say a large cap product is kind of laid down by the regulator, the long short, just give you an example, say the long short equity portfolio for 5 providers can be different.
Yeah, absolutely.
And the experience and the divergence between the managers can also be very different.
All 5 can be right. That's the beauty.
That's the job of advisors.
Yeah. So
to make it, choose the right product for the investor.
But again,
and that's where I started with that critical assessment, that the talent and the blend also is very important, that the product availability or launch is there, but yes, it has to be also married with the right kind of talent, and hopeful that yes, the way mutual fund Sahi Hai campaign has become so big for the retail mutual funds, I'm sure SIFs will also become a lot bigger for some of these sophisticated investors who always wanted the fund manager to also go and try to take shorter positions on the short side to make that drawdowns much more palatable.
True. Absolutely. You've said it.
And we may also then now get reverse brain drain also, like people coming in from the offshore market when this market kind of grows bigger. And this is just a starting point for SEBI, and I'm sure that a lot more changes are going to probably come in. The thresholds which have come today might get further enhanced. The 25% which as a short is allowed may go and tweaked in the future as well. So we at Ionic Wealth, of course, is supremely excited about this asset class. But of course, we'll also at the same point of time, we'll also look at the pedigree and the experience of the asset managers to build on to this wonderful platform and how we are going to do justice for our set of investors. You guys have launched a new platform, a new name for which, of course, in SIFs, you need to have a new brand identity. I think your brand identity is Platinum. So how this name got into with Mirae and what's the thought process? How are you guys going to launch? What are your initial snippets, if you guys can share with us?
Maybe Swarup, you can tell that.
That talk about the brand and you can talk about the product. Yes, I mean, we wanted it to be a name which resonates with people, and I think Platinum gives that slightly premium name, and at the same time, is relatable. So in our typical mid-asset style, we'd like to keep things simple and build on it. Finally, this will be defined by the track record we put on the table. On the mutual fund side, we've now showcased a 16, 17-year track record, and then we would want this business to go the same way. Build good track record, showcase the product, and then if it appeals to people, then probably people can come in and invest more. And the way we tracked our mutual fund business is the initial purchase is never the purchase, the additional purchase is what gives us a kick. If our track record can give additional purchase of investors, we will be happy and we'll approach it in a very similar manner.
I'll give one jailbreak of this 10 lakh rupees minimum threshold. Can you guys answer it?
Sir, 10 lakhs, actually 10 lakhs is a ticket size required, but the requirement is that 10 lakhs has to be invested across all SIFs of the AMC. Right? At the moment, I'm sure because we are all launching first products.
A jailbreak to 10 lakh investment amount, not
For
across the scheme.
investors,
Yes.
10 lakh doesn't apply.
You are absolutely right. So there is a jailbreak for a 10 lakh rupees of minimum investment amount. There is a category which at Ionic Wealth we are promoting a lot more, is accredited investors. They can have a green channel, and I'm sure Swarup is already, he's just trying to say that he already is an accredited investor.
Thanks to Ionic Wealth.
Thanks to us. And an accredited investor can start with as small an investment amount as 5,000 rupees, which is the minimum threshold for a mutual fund. So that is something which we do believe is going to get some of these investors a taste of this SIF, which is definitely a new innovation. And as I said, that we are absolutely excited about it.
No, but I have to put on record that the way you guys educated me on accredited investors was fantastic for me. So thank you for that.
Just to add, investors like Swarup wouldn't mind investing 10 lakhs, right? So though there is a jailbreak,
But
you should invest the right amount based on your sort of net worth to make sure that the product makes sense in your overall portfolio.
But the democratization of the financial products can all become thanks to the help of accredited investor, and that is what we have kind of taken on as a campaign, which has been a successful campaign so far.
Right.
So great, Swarup, for your inputs, and Vaibhav for your inputs on the product. Anything which you guys want to check on us?
So, maybe we said how as AMCs we are excited about looking at SIF, and just to add that we've recently just applied for an SIF long short scheme and hope to launch it soon. How excited you are as a wealth manager to be able to market SIF products? Maybe we would like to hear from you.
I said it multiple times, so again I'll repeat. We are absolutely excited about this asset class. I think it is definitely a new way of of making wealth creation, as Swarup rightly pointed out. And India has primarily been a long only investment community. And we have also seen that some of the investors who have been very strong on macro, one who always wanted to create some hedges or shorts, probably never could find that opportunity being in a mutual fund. I think that opportunity is now available with the investment manager, with the fund manager, and the various advantages when mutual fund kind of kicks in, with as simple as a investment on the go. You can be on Ionic app on the go, can make an investment into mutual fund. Similarly, you can make an investment in SIF whenever it is going to get launched in the country. And then you have tax advantages of derivatives, as I just mentioned it during the podcast. Some of these advantages are definitely on one side, which makes me believe that some part of people who couldn't progress towards a PMS or towards an AIF is today getting an opportunity to start as a stepping stone to believing about what a PMS or an AIF product would have been, and getting that experience through a much simpler product like mutual funds. The only thing which I have to be watchful of is, of course, the ability of the fund managers to get evolve with this offering. And of course, I'm sure multiple new talents are going to come in, and that is why there is a different brand which has got created. There is a different product suite which is going to be available through SIFs. And I do believe that the way we have seen the mutual fund success in the last one decade, since starting 2014, probably 2025 to 2000 or multiple decades, I'm extremely excited that SIFs will also become a much larger category within mutual funds.
Thank you. Thank you.
So all the best to Mirae for launching the SIF as and when. And we look forward to reading a lot more, to connecting a lot more about SIFs, and of course, making our users also through this podcast, making them more knowledgeable about this topic. Thank you very much.
Thank you. Thanks so much for having us.